So let's start off and pick back up with Charles Schwab. Heather, you went to a conference. We won't name the company. You went to a conference this year, a lot of big-time agents and advisors there. What was the big thing that stood out to you in terms of how they handle their trading and their advising within their investment platforms?
They don't. So that was kind of a shocker.
What do you mean by that?
Well, that was kind of a shocker to me because we have developed our own portfolios. We do the trading in-house. They hire a third-party company to do their trading and pass that cost along to clients. So I was very surprised because I thought that's just what advisors do, is be responsible for the decisions and the trading on clients' accounts. But a lot of advisors are kind of taking the easy way out and just saying, "Oh yeah, I'll pay somebody to do that."
They're just kind of finding the money, and that may be okay, I guess. But I don't know how you stay engaged with what's going on. I mean, if you're going to give it to a third party, you really are a lot of blind faith there that they're doing what you hope they're doing. Speaking of that, I know, Wes, you could relate to this, but this is why, let's go through some slides. This is why nobody wants to do this in-house. Look at the number of trades mainly Wes and Shannon Ross have made. You want to go through these numbers real quick, Wes, and talk about this?
Sure. I mean, they are large numbers. We were joking before about how big these numbers can get when you're trading on so many different accounts for so many different reasons. And you might ask, well, why are you doing all this trading? What could the reasoning be?
And there's no cost for the trades, right?
No. The only fee that is paid to Tony Walker Financial is our quarterly management fee. And we take that directly from the account in arrears. There is no additional fees that you pay for trades. But the reason we're doing this trading is that someone might request a distribution. Let's say they're going to pay off their car, or they're going to take a recurring distribution for income prior to taking income from an annuity. Well, you've got to raise cash for those things. You have to sell things to get that cash to send to their bank account. So that's one reason. If we're doing rebalances to keep the strategies in line, so keep a certain amount of equity or fixed income exposure inside the account itself, might need to trade for that. So there's a litany of reasons as to why we might need to trade. But as we go through these numbers, we kind of see what does it look like. We've done 32,012 trades, the average trade amount of about $8,000. That makes sense for someone who's maybe taking a recurring distribution, sending money to them. And then total trades, $346 million. That seems high, but when you think about it, if we're just trading those dollars to get money out to them, or we're rebalancing strategies, investing new money, that's the amount of trades that can happen, and it is a laborious task.
It's amazing, but we appreciate all your work there, and Shannon Ross and all that she does too.
Thanks for watching. We hope you enjoyed that video. If you'd like, check out these other clips, and be sure to hit that like button and that subscribe button for more videos.